Good morning, everybody, or afternoon, or evening, or whenever you happen to be watching this. That's the thing with webinars is that they can be watched at any time, which is kind of a nice deal. This week, I have the task of talking through some pretty dry numbers. Um, but what they don't highlight is the human element of all of these numbers. Of course, probably the biggest thing that's happening in the world right now is the conflict in Iran. And there's a very real human element to that, where people are losing their lives and their homes and their livelihoods and all of the different things that happen. But it does also have an effect on the global economy. And so that's the part that we have to be paying attention to as financial advisors. But that's the difficult part of all of this is that there's the real part of this where it affects human lives, and then there's the part that affects our money. Um, which is of course important, and we need to understand what is happening, but not nearly as important as some of the other things that are happening to actual people. So all of that being said, the number one effect on the world economy right now or on the global markets is on oil prices, regarding what's happening in Iran, of course. This is kind of a messy chart, and so I'll walk you through it a little bit. But basically, what it's coming down to is the blue lines are the price of crude oil over several time frames. So you see all the way back to 1984, 89, 94. So it's not a straight timeline, it's just snapshots of different time periods. The gray is the CPI, Consumer Price Index. And so what the chart is trying to show us is that the CPI tends to follow spikes in oil prices pretty closely. So what does that mean for us right now at this point in time? Well, the price of oil has been quite volatile so far this year, as you would expect, given the amount of oil that comes out of the Middle East and how there's a serious bottleneck with the conflict that is happening right now. Because of that, you've had oil prices that have ranged from $43 a barrel all the way up to around $119 a barrel. So we've had some pretty serious spikes. If that continues, if the price of oil continues to stay up, then you can expect for the consumer price index to also go up, which is of course an indicator of inflation. The Fed had been planning, or at least the market had been planning on the Fed reducing interest rates over this year. Right now, that's all but been priced out of the market. There's not a whole lot of people or prognosticators out there that are thinking that the Fed is going to reduce interest rates at all right now, given how closely the CPI tends to be tied with the price of oil and how volatile the price of oil has been. What does that mean for all of us with our money right now? Well, as you are, of course, aware, the stock market has been very choppy over the past month and a half. We would expect that volatility to continue until the conflict in Iran is sorted out. In the meantime, there's a couple things that are really important to remember with volatility. Number one, volatility is a natural part of the stock market. There's always going to be something happening in the world that is going to produce volatility. It's the world that we live in. We're highly interconnected, and we will be even more so throughout the future. That's not something that's going away. Being that interconnected increases volatility, but volatility is actually what drives growth overall in our stock portfolios. You don't want stock portfolios to just increase in value constantly. That's not good for anybody's portfolio. Volatility is helpful. You just don't feel like it's helpful in the moment. It takes a while for the volatility to actually become helpful. But in the long run, we do end up making more money because of volatility, because we're able to rebalance portfolios, purchase assets while they are lower in relative price. All of that helps us to make more money in the long run. So it is important to be aware of what's happening in the world right now, to be aware that nobody is really expecting the Fed to reduce interest rates. It's almost a certainty that they are going to stay steady for right now. We'll have to see as this conflict continues, if it continues to ramp up, or if it dies out over time, which hopefully it will. We'll see how that actually affects the Fed and what they choose to do with interest rates over the rest of this year. In the meantime, it goes back to the same old things that we talk about all the time. Being globally diversified is very, very important, and having portfolios set up to rebalance so that we can take advantage of the ups and the downs are also really important. Um, we are very sensitive to what's happening around the world, the difficulties that people are going through, but it does have a very real effect on our portfolios, on our income, and on all of the things that are happening with our clients. So if you have additional questions, please feel free to reach out. Please feel free to share this with anybody if you feel like it is useful. We are paying attention very closely to what is happening in the world economy right now. There is risk of inflation ramping back up. But we will just kind of have to pay attention to that and see what happens over the next little while. So once again, if you have questions, please feel free to reach out. We hope that all of you are doing very, very well through all of this, and we will be back in touch soon with more information as we have it. Thanks and have a great day.